I'm going to be presenting about payment solutions with the next generation of application using blockchain and open banking integrated all together. So before we go any further, I'm just going to start by sharing the story of ePocket and how this project came about and why we thought it was necessary to actually develop the product. So 3 years ago, I went to Senegal, which is where I'm originally from, on holidays. And one day, I got up in the morning and wanted to withdraw some cash just to do my shopping and stuff. And all the ATMs was out of service, so there was no cash available. So I went to one of the main banks to actually get some cash to be able to actually buy stuff, because it's a very cash-driven society. Now, the fascinating thing I have noticed is the way people interact with banking and basically money altogether. So sitting, I had quite a lot of business owners carrying large sums of cash sitting next to me, and all they were doing was just waiting to actually deposit that money into their bank accounts. And I was wondering, what time would these people have to actually run their businesses if they have to do this every single day? And the reason why they have to do that is because there is no consumer-oriented product available to them. The banks aren't innovative enough to come up with any solution, and there is no end-to-end electronic transaction that enable them to do that without having to be present at the bank. And I was very fascinated by it, and it didn't seem to actually bother anyone. So I started actually asking around why the ATM were actually out of service. And I got told that at the end of every month, people who got paid their salaries into their bank account will run actually at the ATM to withdraw their salaries so they can actually buy something, mainly because there is no other means of exchanging goods and services to be able to actually get what you want. So when I returned back to Australia, I started thinking about the idea of doing something about this, because it's just very, how do you call it? It's not a good process. It doesn't encourage productivity in a sense, because people lose a lot of time in just to manage their funds rather than actually taking care of what's most important, which is their businesses. So when I got back, I started putting together the documentation to actually develop a product that will address both sides of the coin, which is building a product that will allow small to medium businesses to be able to accept electronic payment without requiring to buy very expensive hardware, which is FPOS machines or related stuff. And on the other hand, I also wanted to design a product that will enable people who have a job and need to receive payment to be able to actually use their phones, because 3G is widely available. Like anywhere you are, you have credit, you have access to the internet. So they can actually use their phone to receive their salaries paid into those phones, but also not feel the need to go to any cash machine to withdraw the cash, because if the businesses have the product that enable them to accept electronic payments, then people will use the same technology to pay them, right? And they don't need to actually withdraw any money. So we came up with obviously using the phones that people were carrying, because now smartphones are available everywhere and they're very cheap from China. So if you take the example of Senegal, 1 in 2 Senegalese at least own 2 smartphones. So I knew that anything that we needed to come up with will have to be actually integrated onto these phones that everyone carries around, and to help them obviously leverage on the benefit of modern and open banking. And when we started working on the project, after 9 months, we had the MVP, which is the minimum viable product, and we wanted to test through API the interaction between the mobile application from the app to the bank and from the bank to the app, in a sense. So this is on the business side of it, so they don't have to actually go to the bank to deposit their money. And when we were doing the test here, we collaborated with one of the payment gateway providers, and they've seen the product that we managed to develop, and they were blown away, because they told us that you weren't solving only a developing country problem, but you're solving also a global problem, because the user case of this product is actually can benefit people even here in Australia. And The reason why he said that was, who here have been into any shop and grabbed something that is less than $10 and been told that you can't accept card because the minimum is $10 or there is a 50-cent surcharge? Me? Pretty much everyone, yeah? And which is a very good point. And the second point was payment processing fees are very expensive as well. So the bank and the FPOS machine providers charge quite a lot. I think the cheapest is from 1.6% plus 30 cents surcharge to actually 2%, which they have to pay to the bank out of actually their money. So to put that in perspective, every dollar you make, the bank will take 20 cents out of it for doing probably nothing in a sense. Now, we came up with this circle of integrated application that we have designed, and basically with ePocket, there's quite a lot of different services that we provide to customers, which means that not only you can pay your utility bills, you can transfer money between peer-to-peer. You have a wallet to actually store your fiat, which is normal currency, and a wallet to store your cryptocurrency. We have an event management system as well, which enable people who actually market events to have a platform that we provide them and actually push those events into our platform so people can have access to it. Obviously, we have a decentralized market, which we haven't implemented yet, but the breakthrough though was blockchain, because around the same time, there were quite a lot of hype about blockchain. Some people understand it, some don't. People been losing their money with cryptocurrency. I mean, myself, I've been a victim of that. I mean, I've been one of the early adopters of cryptocurrency. I knew about Bitcoin around 2007. It didn't worth anything then, like we're talking about cents. And the problem I had was that when we started developing all these centralized exchanges, you get very confused because you end up with all these long codes, and to transfer one Bitcoin or to even acquire them was actually quite a pain. Like, you don't know where to go to actually buy Bitcoin. So we thought, if you want to design a consumer-oriented product, and there's all these new technologies available, and the product was meant to be for a developing country, but now we found that there's a user case for it actually for even the developed world. How do we actually put all these technologies together and design it in a way that is friendly and customer-oriented so people can actually interact with it and understand it, and they don't need to be geniuses or geeks to be able to leverage on the benefit that it can provide. So we decided to actually, through the blockchain, the Bitcoin API, and also the Ethereum blockchain API, integrate those two before we obviously added other blockchain. And the idea was to build on top of those API a very user-friendly technology that will enable people to actually not only store their blockchain, but I can use my cryptocurrencies to go to the milk bar next door and be able to actually spend it to buy milk. And the reason why that is important is talking about actually the guy who spoke just before me. Public blockchain can't function, or at least I don't believe, without actually without cryptocurrency. They kind of feed off each other. And just to explain blockchain in a basic way, it's not very complicated actually. Like, the concept itself been around for quite a long time. And I'll give you an example. It has actually been used in places that you would not even expect. I remember actually when I was a child, talking to my mom, and she'd been talking about this whole lucky draw thing that people do. And when you think about lucky draw and blockchain, and if it's explained to you, it actually relates exactly to what blockchain is. So you have a group of 20 women that will get together, and what they do is everyone will contribute, let's say $1,000. And if everyone contributes $1,000, because they use it as a form of parallel banking to be able to save money, or at least accumulate a considerable amount of money to be able to buy something significant. Now, they will all put $1,000. Everyone who actually have a stake, have a $1,000, and part of the blockchain will actually vote, and they will take $20,000 and give it to one person. Now, if you compare it to modern blockchain, each of those women represent a node. And basically, what they do is they staking. It's proof of stake. And at this present moment, even for modern blockchain and open blockchain to function, they have to use that same system because that system is more scalable than what we're using now. They don't need any computing power to do that in a sense, because if you look at the Bitcoin blockchain at the moment, it was meant to be, the miners were meant to use just normal computers like the CPU. Now it's going to CPU to now people are buying ASICs to be able to actually mine blockchain in a sense. But with the proof of stakes, the transactions are verified and approved in a sense by voting. So one vote equals one CPU in a sense. And you can scale that to all over the world, and it doesn't necessarily have to cost all the electricity we're producing because we can use that for other stuff. And the reason why I'm saying that is because going back to the subject of those women and each of them representing a node, when they how do I put this? Okay, when they actually have given that $20,000 to one person, for you to actually corrupt the system they have created, you have to corrupt or convince each of those women in a sense. And it's a system that actually works because it's a trustless system that you don't actually have to be extra smart or use all this computing power to be able to establish it in a sense. And that just get to show that basically all of these technologies that we're using, it is just ceramics itself. Like all of it have existed before. It's different pieces that through the power of API, you're kind of leveraging on existing systems and technologies to put them together in order to build significant product that can actually benefit people in a very good way. So before I come back here, I thought I'm gonna actually not talk too much in a sense. So we limited the number of slides that we have, and this is to actually allow people to ask questions so we can have more like an interactive conversation in a sense for the time that goes. So I have already used 13 minutes, so I have like 6 minutes. 15 minutes left. Wow, that's really good. Okay, so basically in essence, with ePocket, the idea of it was more to actually solve a real problem that actually affects real people in a sense. And it was to actually provide an environment where everyone can see themselves in it. Build a product that if you deploy it in Australia, it will have its user case, but if you deploy it in Senegal as well, it's gonna have a user case and will serve people in that sense. So basically that was the whole idea, and it's an integration of different services through API to build what's called the next generation of application, because single purpose applications are kind of dying out because people wanna have one-stop shop and have access to everything that they need into one platform, because there's just so much you can download on the interface of your phone. So basically that was the whole idea. We pretty much open to any questions that you guys have, and yeah, we take it from there.
So how are you tackling other solutions like Tapha, which CBA and so forth are provided?
No, that's a very good question. Now, I've been asked that question quite a few times. So with the Tap and Go, it doesn't mean that we can't integrate that into our technology. You're talking about RFID, right? Yeah. Yes. So it doesn't mean that we can't integrate that into our technology. It's just that the security of it itself, it worries me personally. Because the thing with RFID is that it's, again, as well, there is nothing complex about it. The same technology you use to tap and open a door, an electric door, is the same technology that is on the chip of your credit card. So, which means that I can use actually not any RFID chip and clone all the information on your credit card and use it to spend it itself. That's one thing. And the second thing is that originally when designing this idea, it was meant to solve a problem in a developing country. So the technology is not very advanced there. And what you want is find a solution, and a very cheap solution, to be able to enable people to actually interact with the technology in a very cost-efficient way. So basically that was the idea. Does that answer the question? Thanks, sir. Anyone else?
Can you walk us through exactly how it works? Like someone walks in with a
Yeah,
phone
yeah.
and
Yeah, I can actually. The thing is though, I don't have a camera here, but I got the application here. In a sense, you can download it though, and I will let you through. I can run you through it. So how it works is that there is if you talk about the fiat aspect of it, the segment of it is that you go to a business, for example, you download the app, you register, and you enter all your information. You can actually synchronize all your credit card into the application, and you go to a business. You want to pay. You want to pay with, let's say, fiat or crypto. If you want to pay with fiat, you can select what bank card you want to pay with, whether you with NAB or CBA or any other bank, and enter the amount you want to pay and pay the business. And basically, the business owner will be charged 0.5% by us, which is definitely nothing compared to what the bank is charging in terms of transaction fee. The other option you have in how it works is that you want to pay with your cryptocurrency, and the business owner does not want cryptocurrency and want to receive fiat. You can actually enter the amount of cryptocurrency, Bitcoin you have or Ethereum to pay, and we have built an algorithm that will enable the business owner to receive fiat money on the other end. Does that explain?
yeah, I suppose that like you have a picture up there of a QR code.
Yes.
So do they need hardware? Does the
No.
business owner need hardware, or how does that actually work?
Okay.
How do you prove you've
Yeah,
paid?
no, fair enough. Yeah, good question. So they don't need any hardware. So with the QR code, when you register, there is an automatic account that will be generated to you, and that account, all the information that you have provided is attached to the QR code. So that QR code, to explain it in much more simpler terms, is your BSB and account number. So the QR code only allows you to accept payment. So you can actually copy the QR code and send it as a letter to anyone in Australia, or when they scan it through our system and pay the money, it's going to land on your account. And so basically that's how it works.
But how do they verify it?
How do they work?
So I walk to the milk bar and I buy a bottle of milk
Yes.
and I scan the QR code,
Uh-huh.
and then do I show the merchant that I've...
No, they will receive a notification automatically.
right, so on their phone.
Yes, yes, yes.
Okay,
Yeah.
thanks.
Just one question. Just a real case happening in China is, just using your example, is someone go to your shop,
Mhm.
pin his QR code, stick on the cashier, and then if a customer in that case scan it, what will be happen, or how can they get the refund?
If the customer, sorry.
So if a bad guy just come to your shop and then he stick his QR code in front of yours one, which has
You took- yeah.
in China.
Yeah.
In that case, how do you handle it, or how the
Yeah.
funds will be
Yeah.
processed? Because that definitely will be argued with customer is, hey, my phone said that I'm already paid, but the shop, his phone is, there's no notification.
Yeah. Good question too. I mean, you're talking about QR phishing pretty much.
Yes.
And basically QR phishing actually is something that's very prominent in Southeast Asia, because that's where it is, like the using of QR code. I mean, QR code been around for years in a sense, but using it basically is more common now and have started obviously in Southeast Asia. And because they use URL, and those services provide different other services that are not only payment, people have been tapping into the curiosity of the users and actually putting fake QR code on top of it, and when you scan it, it picks up the URL on top of it, and they will penetrate your system and actually pretty much hack it. Now, what we've done with that is that basically our technology have layers of security that does not read any QR code that is outside of itself. So if you use ePocket, for example, and you have your QR code at the shop, and I'm using another technology or even using ePocket itself and having a fake QR code on top of our QR code, our security system will detect it and would not actually enable the payment to happen.
Another question. What about the amount that the vendor wants to charge you? How do they transfer that? Does the buyer have to key that in, or does the vendor somehow send it to you?
A good question. The buyer will have to key in the amount that they want to pay. The amount that the item costs. So if it's $10, you scan and there is a population that happen, and then you just enter the amount, you key in the amount you want to pay, and then press submit, and then it's just going to go through. And once it goes through, the receiver will receive a notification from our application and also a text message straight away, and the person paying also will be notified the transaction is successful. And basically this pretty much allow us to control the risk of chargeback and anything, because we kind of have proof that the transaction occurred. The other thing is, in terms of receipt and all that, we have integrated also an electronic receipt, that any transaction that happens between one wallet to another, whether it's with crypto or fiat, a receipt is automatically generated and electronically stored into the application. And you can't pretty much remove it either as well.
Where's your account data stored?
Sorry?
Where is your account data stored? Is it stored on the device or centrally, or?
AWS.
Okay.
So yeah, that's any other.
Yeah, what happens when you end up with transmission errors or things like that?
Sorry?
What happens if you end up with a transmission error or partial failure or something?
Password failure.
Yeah,
Partial failure.
partial failure.
I mean, now I think what people do is they kind of distribute the data that they actually storing. So basically, what you do is you can use AWS, and then you can use other companies as well in case there is an issue. So you have another option to make sure that the system does not.
So I meant transactional data rather than the cloud data. So as an example, currently if we do standard credit card transactions now, sometimes they get network errors and the transaction fails. So you need some way of validating that transaction's worked, for instance.
Yeah.
So I was just wondering how you deal with situations where the transaction sort of like tries to start but fails halfway or something.
Yeah. So because we have integrated with a payment gateway provider and a merchant facility, those information actually will go to them and they will pick it up straight away, because they actually process the transaction when it's gone to credit card and things like that.
So Visa and stuff like that are taking, like for them, why you're paying a lesser fee per transaction than you are for doing a Visa transaction. Visa, it just doesn't seem. It seems odd that they would, you're able to give a lesser fee for
Well,
using the same.
that's the special sauce though. That's our special sauce. You're talking about the fact that we are cheaper than actually the standard banks in a sense, is it?
You're not doing anything like, you're not saying like, oh, I'm loading $100 into my e-wallet, so it goes through as one transaction, and you do multiple transactions against your e-wallet. It's not like that. It's a one-to-one relationship between.
No. I mean, like when you load the money, so basically the scenario here is that you can load the money into your wallet. Like you can load $100, let's say, into your wallet, and the way you load that money into your wallet is you can do it through your credit card, or you can do it through polypayment. And once the money is transferred to the wallet, it's just there. So you can use the money into the wallet to pay, or you can also have the option to use polypayment as a payment option to pay, or your credit card to pay. So when you actually scan the QR code to pay, you have 3 different options pretty much to select on each of them to make a payment, whatever you wish. So if you want to be paying directly from your wallet, the funds are sitting on your wallet, and those funds on your wallet, by the way, you can withdraw it whenever you want.
You said this app is using blockchain technology under the hood, and I know every time a block is added to the blockchain, it takes time to be mined and verified. So how long seller and buyer have to wait until to see the process?
You mean sell and buy?
The buyer goes to the shop and.
Yeah, okay, but it depends on what blockchain you're talking about, because I mean, at this present moment, there's quite a lot of work that is being done by different blockchains. I'm not sure if you have heard of Stacknet. And you have the Ethereum as well is coming up with all these solutions to make sure that the transaction happen very fast. Bitcoin blockchain also, I mean, the transactions are quite fast now, and I think people had quite a few issues last year around December, and that's because the network was very saturated because there were all these people actually jumping and buying Bitcoin because there was all this hype about it, and they had to come up with a way to actually scale it. Now, on our specific situation, I mean, the main thing that people use on a transactional basis is either Ethereum or Bitcoin Cash, in a sense, because it's faster and it doesn't also obviously use much gas fee as well, which you call miners fee in the Bitcoin blockchain.
Okay, so I think that's it for questions, but I'm sure that if anyone has any further questions, you can get in touch with Tasha as we leave, but also assuming that ePocket has some information available online, if you have a website. But thank you all for coming, and we'll see you out in the hall.